will come from.
To understand more on the company and the future plans, let's welcome in Mukesh Vasani, the founder and chairman of Aimtron Group. Sir, firstly to start off with, the guidance that you have given, 40 to 50% CAGR for the next couple of years. Why are you so confident that the company will be able to do this kind of a growth? What are those factors because of which you are so confident?
Thank you, Soumeet, and thank you, the team, having me here in this platform, and thanks to the audience and the well-wisher of Aimtron. It's good, I think we have a very strong flow from our customers, ODM customers especially. See, Aimtron, in a nutshell, it has 3 facilities, if I give you a 20 seconds overview, and one in Bangalore, one in Vadodara, and US exposure. So we have, and also we have 100 crore worth of ESDM, a new end-to-end mechatronic project we just started. So coming back to your question, we have very strong commitment from the customer, stickiness of the customer. In a power sector, we have a customer is US-based customer. They need a China plus one strategy for India. So we are taking those clients. They are based on international and have a local presence over here, and we do them a end-to-end solution for them, so they have a longer stickiness and 5 years commitment for those products we building for them. So that is the reason we are very confident about our ODM model, and a 40 to 50% CAGR, even better. We are performing last couple of H1 and H2, so you can see that.
Right.
Then that's the reason we have a very strong, result and visibility.
Right. Your order book stands at close to 460 odd crore rupees, I believe, which gives us strong revenue visibility, no doubt about that. But what is the kind of margins that you would generate from this order book? Any average margin that if you could guide us for this? And secondly, what is the kind of growth that you're expecting on order inflows going forward?
So, second part is first, we have very good order flow, and again, current PLI, current government initiative, current electronic boom, we are really in a good space, order inflow. Even looks like the static situation is resolved, and we are getting a lot of activities from US, international order also. So that's second thing is regarding margin. We had a very straightforward guideline to the street, and we are following that guideline. Normally, all our orders are same kind of a level, means we take the order with the calculation that we need to make sure that our margin and our EBITDA stay intact. So that's why we take the order, and those are the customers we select, and those are the customers we work with them, have a longer commitment, and at least have some value add or have some engineering support, or that's what they require. So that's why we are very confident.
Hello, sir. This is Anushri joining in as well. Just a couple of questions from my side. If you look at the current margin profile, that's in the range of 25% is what we are looking at. Is that the sustainable range for the next 2 to 3 years, or with the backward integration in place, there would be a further improvement in this number also that you're looking at? And just want to understand this, considering that's higher competition in the EMS segment, would this be sustainable, the range that we are looking of 25%? And also, if along with that, you can talk a little bit about the PLI benefit also that you were just addressing.
Thank you, Anushri. Yes, these.
Investments in the securities market are subject to market risk. Read all related documents carefully before investing.
We are working right now is international MNC. As I said before, we have most of the client is international, but they have exposure here and they're looking something local here. So that's why we will be maintaining that margins as you look at it on the street.
On that front, about 60 to 65 of your current revenue is from the domestic side, is what we are seeing, while 35 to 40% is from the export markets. Now you're exploring new opportunities in regions like Australia along with Europe. So just want to understand going forward, how is this mix going to shape up in FY26 also, or even going forward in something 2 to 3 years of timeline? How is that going to shape up? And is there a difference between margins in domestic versus the international markets?
See, yes, definitely there is a difference, a couple percent here and there. We can see domestic market, but what we select is more international MNC that help us to maintain that. But the growth right now, 60 to 70% you can see on the current years. Looks like in the next 2 years we will we'll have same way. The international exposure we have, US exposure we have. So we are, we had before, if you look at the year before, we had more international exposure. And because of the tariff and current geopolitical situation, we shrink a little bit international and make it more India. But then we started this activity again, and our, inflow is coming back to international. And that's where we're going to maintain our, revenue ramp up and margin.
I believe recently you did some capital expenditure, right, to set up a plant. Can you just give us some idea on what is the current utilization level and when is the next phase of capex that the company will require?
Yes. So it's a very interesting topic for me also because, like right now we have a facility in Bengaluru, which is focusing more on design, high tech, MedTech, life-threatening MedTech devices, that kind of project we are maintaining government defense. Also, we have a plant in Vadodara, which is can generate up to 500 crore, which we think about end of the next fiscal year will be at full capacity. So we need a new setup, and as I said earlier, because we have a lot of a push from government and new schemes and everything. So we are setting up 100 crore worth of ESDM in 3-acre land. We have 2 SMT lines, end-to-end solution with AI-enabled state-of-the-art infrastructure, including building and everything. So we already started. So that will be up and running in a year, like a Q4 27, or maybe Q1 27 or Q4 26. So that's where we start that. And that line will be more focused to mechatronic. So, this is the specialty about Aimtron, design in electronics plus design in mechanical. So we can give a full box system integration for our customer. So that project is already in the process, and I know we are moving forward with that.
Just want to understand, sir, what's the peak kind of a revenue potential that you see with this new capacity additions which are there by fourth quarter onwards? And I'm assuming by the fourth quarter of next year, it would be on the peak levels as you just spoke about it. So is it 1,000 crore of a figure that we are seeing, considering all of these new facilities which are there?
So total capacity-wise, we are all set. Once we have new project lined up, new greenfield project, then will be for 1,000 crore plus minus 10% capacity is available. To reach 1,000 crore revenue, yes, we have to work hard, and we are ready for that, and we already have pipeline for that. So next year we start seeing the revenue. We give that projection to about 10-20 crore for first year, and then it's going to jump more. So in 3 years, after 3 years, total revenue we are eyeing is about 900 to 1,000 crore.
900 to 1,000 crores. So just a follow-up on that. So considering that you are seeing such a huge revenue potential for this, what's the capex requirement currently which is there? Along with that, there's also some inorganic opportunities that you're seeing. You already shortlisted about 5 to 6 or odd. So considering for both of these, are there any requirements for further fundraising?
Right now, we are a debt-free company, and also I don't think so. We need any money from the street right now. We can get a little bit committed here and there. But first, we are putting a 2-phase. First phase, we have only 2 SMT lines will be there, so that way we don't need any more capex. And once you grow, let's say more than 750 crore, we might to add maybe another 50 crore or 100 crore, adding 2 more SMT line or clean room or other customer demands. So when we evolve, new customer evolve, and that's where based on that customer, we will do a future share. But to answer your question, right now, no need any debt or any fundraising, but maybe 1 year or 2 years when we cross, it's going to be 750 crore, we might need to add a couple more lines at that time. 50 to 100 crore maximum we need.
And anything on the inorganic acquisition side?
We are looking all the options right now, Sumit. So right now, we are looking options, but it's too little too early to announce anything. But yes, we are, and that's way to grow. So we will have to grow organic and inorganic. Also, we would grow with backward integration and forward integration. In forward integration, we have like a mechatronics. We will put a plastic injection molding. We put a metal stamping, metal fabrication. So those kind of we call packaging in electronics language. So we'll do the packaging, electronics packaging, in the new plant right now in the Greenfield project already, starting next year. So we will start that. So back to M&A, I think it's too early to say, but definitely yes, in our horizon, and we will make a right decision. We are not crazy about putting together factories to make but we are very diligent and we are very careful about capacity and execution of the capacity and the team and all over aspect of the M&A, and then we'll do the right M&A for our company's benefit.
Lastly, sir, just wanted to understand how much of your revenue now comes from aerospace and the defense segment, and you also spoke about multiple segments or areas where you have already received approval from the company. So what is the progress on that front? And both these segments are high growth, aerospace and defense. So how much of a contribution are you expecting from both these segments to come in, say, over the next couple of years?
So we right now, we just received the 9100 certification, which is a basic requirement for aerospace and defense. So we already started on the PSUs. Currently, we got a small orders and orders from PSUs. But beforehand, we already started working with a defense drone and defense category for the product which we are bringing over here. We got the tooling deals for that also. At this point, percentage is a smaller percentage, but it's a high margin, high growth area for us because when we tap will a customers like international customer like Caterpillar and those customers, they are Northrop Grumman and those customers will tap at that time. So, but yes, right now it's a very little slow margin, but we are ready and we have a system ready for that to accept a bigger and larger ODM project for aerospace and defense.
Well, thank you, sir. Thank you for joining us and giving us the way forward for Aimtron Electronics. Let's welcome in our fundamental guest, Avinash Gorakshakar, founder